Hey guys, what's up? Alec back with the daily stock market, and look at that, an overall red day for lots of individual stocks. We even have DraftKings up 15% just in one trading day and up 25% in the last week. So in a future video, we'll definitely dive deeper into DraftKings and some of these other stocks that are moving. But this week is another exciting earnings week on the horizon. So in this video, we're going to be going over earnings and some stocks that are reporting, some heavily scrutinized stocks and some stocks to definitely be watching. So Monday before the open, not much. Monday after the close, not much. Okay, we have TripAdvisor, Goodyear, Clover, Realty Income, and some other ones. But Tuesday before the open is where it really starts heating up with Uber, bright and early reporting. We have Celsius reporting. That stock is up thousands of percent in the last 5 years. So it'll be interesting to see if the growth is continuing for Celsius. Okay, we have Upstart reporting Tuesday after the close, Wish, Dutch Bros, and eBay. Now, moving on to Wednesday before the open, we have Roblox, which is going to be a very interesting one to be watching. Warner Brothers, Fisker, Under Armour. And then after the close, we have everyone's favorite meme stock, AMC, reporting alongside Walt Disney Company, Twilio, Marathon, Affirm, Duolingo. All interesting stocks, and Virgin Galactic, ticker symbol SPCE. So for Wednesday, Roblox, AMC, Walt Disney Company are some good ones to have your eyes on. Thursday, before the open, we have Oatly, Fiverr, and Tapestry, and Sony. And then Thursday after the close, we have Unity, The Trade Desk, Wynn Hotels, Aurora Cannabis, Canopy Growth Company, which is another cannabis company. And then Friday, not much going on, okay? So the first stock I want to talk about in this video is Disney at $85 per share. In the last week, they're up 7%. So they've been on a little bit of a rally just in the past week, because if we pull out and go to the last 3 months, they are about break even right now, but they've been trading under $80 per share lots of times, which is down around 7% overall in the last 3 months. But if you scroll out to the year and to the 5 year is when we can see the real catastrophe going on with Disney and where the momentum is at currently. It's down, 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 okay? Ever since October 2021, it's been down around 51% and is currently sitting at a 5-year low. Now, we did see Disney closer to $200 per share in March 2021. Now, the question is, can Disney get above $150 and closer to $200 per share again? It might take some time, but I think that Disney can definitely get there, even if it's 5 years down the road. Disney is a company that's here to stay. But let's talk specifically more about their earnings this quarter and what's going on if they're going to move under $80 per share again. And if they do, is that a buying opportunity? So here's an interesting article. We see Disney and other entertainment giants like Warner Brothers report after upbeat results from peers. But investors are getting harsher on companies that don't deliver. Earnings to watch: Disney, Warner Brothers, Discovery report results this week. Admin investors push for stronger streaming profits. Results from Rivian, Uber, Lyft, and Robinhood are also due this week. Okay, last month we saw Netflix stock jumping after it reported a big subscriber gain and hiked its prices. Last week, results from Paramount Global, ticker symbol PARA, that was up 15% on earnings. They beat expectations, sending shares of the streaming and entertainment giant on its best percentage gain in nearly a year. Roku also offered upbeat guidance and a beat on expectations, moving the stock 8% higher on Roku. This week, as Walt Disney, Warner Brothers, Discovery, Lionsgate Entertainment, and AMC Entertainment Holdings all report results this week, we'll get a deeper sense of whether the entertainment industry is starting to make investors happy again, even if they make viewers less happy in the process. Those companies will report as the streaming industry, under pressure from investors to turn on to better profits, consolidates, and platforms charge more to watch. Disney stock, ticker symbol DIS, which reports results on Wednesday, faces questions about losses at Disney Plus, efforts to cut billions in costs, and stamp out streaming account sharing. Its planned takeover of the streaming platform Hulu and speculations over which of its large media properties it might sell. Bank of America analysts recently estimate that ESPN, which Disney has leaned on for years, could be worth around $24 billion alone just for ESPN. Sales at the theater chains have been lifted in recent months by Barbie and Oppenheimer, which both were original films. Analysts have said the avalanche of sequels and remakes into theaters is unlikely to stop anytime soon. The pressure to boost profits will ultimately affect what TV shows and films get made and what viewers actually consume. So lots of bullish things could be happening for streaming companies and entertainment companies in general, as we went over in the last article, but we have analysts saying to stay cautious of Disney stock. This one here, this article by NASDAQ says Disney reports after the close on Wednesday, November 8th, Wall Street expects Disney to earn 68 cents per share on revenue of $20.13 billion. This compares to a year ago quarter when earnings came in at 30 cents per share on revenues of $20.15 billion. So pretty similar. But their EPS is expected to be a little bit better than last year. What to watch? Can Disney stock ever regain its magic? That is the question investors have asked for the past 12 months. And remember what Warren Buffett always says, be greedy when others are fearful and be fearful when others are greedy. Right now, people are extremely fearful with Disney stock, wondering if it could ever regain its magic once again. And Disney is here to stay. So it could be a good time to be buying. There's no guarantees. This is not financial advice. And overall, if you don't like Disney stock, then stay away from it. But if you are a Disney person, you like going to the theme parks, you like watching the movies, then this could be a good buying opportunity right now, and especially if it falls on earnings reports. While the company has enjoyed success with its streaming platform Disney Plus, its shares been a disappointment, down 16% over the past year, trailing the 16% rise of the S&P 500. Meanwhile, over the past 6 months, the stock's down 14%, while the S&P 500 has rose 6%. Disney, a stalwart of the entertainment industry, has struggled despite having strong competitive advantages. The company grapples with a set of challenges that has weighing on its stock price, including persistently weak profit margins, operating losses stemming from the direct-to-consumer segment, and imposing amount of debt. And there hasn't been any signs to suggest that Bob Iger return as CEO of the company was a great decision. The company's recently announced plans to acquire Comcast's 33% in the streaming service Hulu. Okay, they want to buy out Hulu, so they own it outright and own 100% of Hulu. Combining Hulu with Disney Plus will present Disney with tons of advantages, including stronger leverages with advertisers, digital downturn, new licensing deals, as well as cost-saving opportunities. These integrations benefit can potentially have strong effects on the bottom line. Disney said it expects to pay about $8.61 billion, while analysts have valued the 33% stake held by Comcast to be between $9 to $13 billion. It remains to be seen what the eventual purchase price is, but assuming Disney can realize the benefits and leveraging of combination of the two platforms, Disney stock may finally begin to rise in the next 12 to 18 months. On Wednesday, investors will want additional details about the company's long-term growth strategy. So thank you so much for everyone who made it to the very end of the video, and I hope you actually learned something and took something away from this video and walked away with a different perspective. If you want to see exactly what I'm buying, when I'm buying stocks on earnings this week, and strike prices, expiration dates, option trades, click on success number 9. join the family now on our Discord. We have tons of people making lots and lots of success. Thanks, Alex. Since joining the Discord and Instagram close friends list, I'm up significantly, and we can see that they're up 96% in the past month alone. And that's not just one person. You can go through, there's now over 900 positive testimonials. If you click on success number 9, read those. Success number 8, success number 7, success number 6. There's thousands of testimonials at this point and thousands of success stories. So what are you guys waiting for? Become the next success story for the daily stock market. Just message me here on Instagram. 218,000 followers now, and now over 70,000 followers on YouTube, which is a huge milestone. So thank you guys so much for helping me grow, sharing these videos with friends, and even just hitting the like button, something that simple, and viewing these videos to the end. It really helps push these videos out to other people so they could be prepared before earnings as well. Thank you guys for all the love and support. Let me know what you guys want to see in the next video, and I'll see you guys in the next video. Remember, don't time the market, buy the market. Peace.